The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, folks. Today is going to be a cycle day. I'm going to be talking about the aspects that we have occurring now in the market, and also a lot about the Bradley model and how it fits together. And I'll show a few examples, to give you an idea of what we're looking at. But the first chart that I put into Tiger TV today is the chart of gasoline futures. They've been coming down for many months, ever since we hit that 786 Gartley about 3 months ago, and we've made a three-drive to a bottom pattern. We've matched the lows of last year. It's already rallied $2,000 today, so there's some type of a bottom forming in gasoline futures. So we should be watching those for a low-risk entry point sometime over the next 4 or 5 trading days. So that's just the big thing that I see in the gasoline futures. Crude oil has rallied a little bit. It's been a lot more bullish because it's only backed off about $8 a barrel from its high, whereas gasoline futures have been going down and making lower lows for quite a while. With that three-drive to a bottom pattern today, it completes us. If you have any questions, it's 877-927-6648. Now, the next chart that I'm going to feature here is from my colleague that I'm writing the book with, Shane Schmolian. And Shane is a physicist, is a teacher. He's also a very, very astute astrologer who I met through Alfie Lavoie. And we use Alfie Lavoie's AIR software cycle program that, does all the work for us. But I wanted to show you some of the work that Shane has done using the aspects, which is very similar to the Pesavento index. It's just a little different a little bit of variation of the Pesavento index, but it's the same principle. Shane has a website. It's wolftrader.net, and he's a pretty nice fellow, young fellow, but he's going to be doing great things over the next few years, I'm sure. This chart that we're looking at with the combined transits, what I'd like for you to look at is you'll notice on 9/18, that was a day that the FOMC meeting met, that's where a transit is nothing more than when two planets meet at a certain angle in the sky, a perfect angle, like a 45-degree or 90-degree, or conjunction, which is 180-degree, which is 0-degree, or opposition, which is 180-degree. That's all it means, and it adds them together. And I'm going to show you this a little bit in the Bradley model and how it's constructed, because we're over something really huge, folks. I haven't seen anything this big in the stock market since the Thanksgiving bottom, and that's I think we're at some type of a major bottom here, and it just looks awfully bullish to me. So I have to be extremely careful, because adage, the worst person is a sold-out bear. And I was bearish until Friday, and Friday I just said, that's it. I said, I can't be short anymore. And so we'll see what happens. But what these transits are showing us, that we have a really strong day occurred on the full moon of Saturday, and then we also had one is occurring today. But there's a whole lot of them acting like magnets that occur at the end of the week around the 10th and 11th of October. So my assumption is that sometime in the next few days, the government's probably going to come to some type of an agreement to make this market go higher. That's what it looks like to me. Whether it's made the final bottom or not, I'm not actually sure, but I do feel that it's very, very close to something, really dramatic happening, with the stock market. Now, I'm going to move over and talk a little bit about the Bradley stock market model, because I think that it brings a lot of information to the table when we're doing this, and I'm going to put in the current Bradley model. It never changes, so it's basically what I'm looking at is the Dow Jones Industrial Average on a daily basis, and as you can see, Friday's low was a perfect 786 retracement coming in, and as you can see, the Bradley date is due to bottom sometime between the 7th and the 11th. That'll be this week. So, whether this low holds, we'll have to wait and see. But what's interesting about this is that the Dow has made a 786 retracement from the high that we made in September. And if you looked at the Bradley model from when it topped in May to where it's bottoming right now, if you'd actually done the Dow Jones, it would have been positive. But if you'd have done the NASDAQ or the Russell, you would have lost because those have been extremely strong. Now, on Friday's action, the S&P 500 made a 61% retracement. So you have the Dow making a 786 retracement. You have the S&P 500 making a 61.8% retracement. But the NASDAQ and the Russell 2000 cannot even make a 382 retracement. No retracement at all. There's only one other time in the history of me looking at this stuff since 1875. And of course, we didn't have the NASDAQ in 1875. It didn't start until 1972. But the only time this type of occurrence occurred was in 2000. And the NASDAQ continued higher, whereas the Dow Jones and the S&P did not. They topped around January, but the big top in the NASDAQ wasn't until March, and then it went sideways until September. And I'm going to show you this because, I get a lot of heat from people saying, oh, this Bradley model is, really not very good. You're right. Sometimes it's not worth a hoot. But other times it's pretty good. But you've got to go with the probabilities, and this is the best thing I've ever seen for predicting what the stock market's going to do, and it does it, 150 years in advance because it's just a listing of the positive and negative energy that's occurring among the planets, and I'll show you how that's calculated when we go on to the next slide. So what I'm saying on this particular chart with the Dow Jones, we are looking at a potential major bottom occurring this week. If it hasn't already occurred, it should be this week sometime. So that's what I'm looking at here, and believe me, if we break below 14,800 in the Dow, I'll certainly be wrong on this, but it's going to give a tremendous opportunity if the market does bottom here and then rally into the Thanksgiving weekend, and that would be the sign of a big bearish sign where the Bradley model turns down for the next 12 months. If in fact it does that. Now the Bradley model is basically a cyclical model that is based on nothing more than the patterns that have occurred in cycles and stocks over a period of years, and it's based. If you give me 1 second here, I will get the. I want to get this hooked up so I can see the. So you can see how the cycle thing is constructed. And you'll be able to get an idea that it's really all numbers. There's nothing really mysterious about what's going on in the market. It's a fact of looking at positive or negative things in the market. And this was done by a researcher at Yale University back in the 30s. His name was Dr. H.S. Barr. And what he did, he constructed a valency of conjunctions. In other words, how the planets react when they touch each other. And they have some that are positive and some that are negative. And if you look up here, I don't know if you know what the little symbols mean or not, but there are two planets that are almost always, well, they are always negative. One is Mars and the other is Saturn. And that's based on the electromagnetic calculations that they did at Yale University. What Donald Bradley did is he took these and he matched them up so that he could see whether when Mars was in conjunction with Venus, whether it was positive or negative. And that's really what it tries to look at. Now, what he did after he constructed this, and remember, he just did this little book called Stock Market Prediction in 1946. It was only a $4 book. It was 50 pages, and he made a prediction of what was going to happen in 1947, and he was spot on. It was just absolutely, right on. And sometimes it hits that way, and other times, it doesn't do as well as you'd like for it to. But it's better than anything I've seen, and I've seen quite a bit of stuff, over the years. So this is what we're looking at. So we know what's happened, so far this year in the Bradley model. And then what I wanted to do is I wanted to show you, a couple other years where we had, some things like this also occurring that were very interesting. So we'll take the year 2000. That was right before the NASDAQ gave up 85% of its value. And as you can see, it made a top in September. The first top was in January, and we made a lower top in September. And from September of 2000, the market went down for 3 years into the final bottom, which was around 2003. So this is what we're looking at. We're looking at cycles that try to give us a little bit of an edge. Now, to use the Bradley model by itself is, I don't think, very smart, because you have to have something to gauge what your risk is. And so that's what we use the price, because price is related to the patterns that we watch for, whether it's the Gartley pattern or the butterfly pattern, the 3-drive pattern, the 135, the 5-point reverse wave, whatever it happens to be. If we can match that with what the Bradley is doing, then we have something that we can say, okay, this is where the risk should come from, and we shouldn't risk very much if we're right here. So this is what we're watching, in the stock market at that time. That was the year 2000, and then I wanted to do the crash year, because everybody always asks me about that, and I hope I can find it. This was the bottom, I believe. Hold on a second. This was the bottom, and I wanted to show you 2008. That was, the crisis that we had, and that started in actually the late spring of 2007, and it really started down, dramatically in 2008. So those are examples of what it'll do for you as far as getting on a trend and holding it for quite some time. I've done every year of the Bradley Bradley stock market model from 1875. That's when we first got good data from the New York Stock Exchange. It was 10 years after the Civil War, and so since that time, we got data, just so easy that it's just can be you have it instantaneous, at all times. So it makes it pretty good. Now I want to show you the mother of all Bradley predictions. And this one was very, very prominent to me, because I was just writing my book, Astro Cycles, The Trader's Viewpoint, and I'm doing another book with Shane Smolian on the financial astrology. It's a rewrite of that book, but it's far, far better than the rewrite. Shane is a very good author, and I'm proud to be associated with him on that. We've collaborated on things to look at, and with Alfie Lavoie's software, we've really got some wonderful things to show you with lunar cycles and the aspects and how transits work. It's really going to be a very good book. It'll be sometime early next year that it'll be out. We're almost finished with it. But if you'll take a look at this Bradley model from 1987, you'll see that it topped on August the 25th. That was a day known as harmonic convergence. At that day, we had 5 planets that were all in conjunction, the inner planets: Venus, Mercury, Mars, Jupiter, and Saturn were all at 0 degrees. And that was the top in the market. So we're going to take a little break here. We're going to come back, and we're going to talk a little bit more about the stock market.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I had a request to post the Bradley model for the next 6 months, which I did. It takes us through February of 2014. So what I'm expecting is that if we do make a bottom in here, we will be looking at a rally into Thanksgiving, and if that happens, that would be a really nice scenario because it could be a lower top, it could be a triple top. There's a lot of things that could happen, but there's just so much emotionalism that's going on about the this political thing. It's just it's really amazing. Why anybody would want to go into politics? They must really be a glutton for punishment because it's just I just can't believe the games people play. But let's forget about that. I'll get off my soapbox and we'll just take a look here at what we see happening in the stock market. So that's what we think is going to happen with the Bradley model. We should be bottoming this week between today and the 11th. Someone also asked a question. Dr. Martin Armstrong is having a date this week, I believe, somewhere around the 8th or 9th or 10th, I'm not sure. And they asked if my work was similar to his. And I don't think so because, we look at similar things because I know he does a lot of astrological things, but he does a lot of things with sacred geometry also. But, what he does and what I do, I can't really make that decision. He's a really smart dude. I can tell you that. He wasn't smart enough to stay out of jail, but I did stay out of jail. At least they haven't caught me yet. But he's a smart fellow. I've met him. He's really a bright man and extremely, extremely bright, well-read. And so I pay attention to his dates, but I just do my own work, and it's really simple stuff. I just look at the Bradley model and the patterns and relationships, and that's what that's what I try to do when I'm looking at these things. To give us an edge. The next chart that I wanted to bring up here is the one that gets a lot of heat also, and that is the VIX index, because we have made a ABCD pattern now. The A was down when we had the solar eclipse and new moon on August the 6th, and then of course this thing has been going quite nicely with new moons and full moons, and we had the new moon come up on October 6th, so that means that we should be bottoming in here in stocks and getting ready to rally. Because when the market's coming down into a new moon, it usually means a buy point. And that is the ideal situation for the long-term lunar cycle that we look at, because if you remember the work that was done by Tom Pelk from Nomura Securities that we posted here before, this is the same type of work that we've been working on for 30 years. And Shane has taken it to a different level by using not only some of the lunar cycles, but using some of the transit to give a better timing date as to what we're really looking for. So I think this is going to be really interesting. We've completed the ABCD and the VIX index. That completed at 1880. We're trading at 1834 right now. And there's still a possibility we could go up to the 786 retracement, which is 1975. And, frankly, if it gets real crazy and, they decide to fold up the government for good, which might not be a bad idea if they started over, we could get higher than, 21 or 22 in the VIX if it gets really crazy. But the markets are not acting that way. I mean, it really doesn't, lend itself to, what you think is something, really crazy happening. So we'll see if that's going to be anything that it's going to mean anything or not. We'll have to wait and see, down the road if that's what's going to happen. One other question that someone asked me is what do I think the probability is of the market bottoming this week? I think it's quite high because there's a lot of things that are coming together. You've got a lot of ratios coming together. Now these might fail. But the timing goes all the way out to Friday, October 11th, so it could be any of those things that make it do what it's supposed to be doing, if in fact it is working this way. If it does melt down from here, then that would tell us that this low that we're having is going to be a very, very interesting one, because it will tell us that we're most probably getting ready to head far, far lower in the stock market. But I just don't see that. It's just not that clear to me as far as looking at where these things are, and it makes me believe that we are getting ready to see a market that is getting ready to have a good rally. And I think if they ever come to some conclusion over there in Washington, that it'd be enough to get the market moving, and that would be something from a positive standpoint that people would say they have a chance. So we've got to take our half-hour break here, or the break at the half hour. When we come back, we'll have some more. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position subscribers sold recently for a 42% on part, plus a 64% on rest. And Hertz Global as a core position for 6 months before exiting the position. A current position, entered as a turnaround company with good technicals based on Basil's waveform, is trading up to 170% of its entry point as a portion sold earlier for a 21% gain. Subscribers to The Opening Call can see the Chapman Wave techniques demonstrated and explained daily to educate investors. To get your 2-week free trial to The Opening Call, just visit the front page of TFNN.com. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday at 11 a.m. Eastern on TFNN. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, folks, we're back, and we're going to take a look at the Dow Jones Transportations. We're going to look at the whole Dow theory thing. We've already looked at the industrials. They've hit the 786 retracement. As you can see, the Dow Jones Transportations has been even stronger, and it's barely made a 50% retracement. It hasn't even made that yet. It's hanging around the 38% retracement coming off the last major low that we had, which is another sign of bullishness. That doesn't mean it can't go a lot lower, and it could, come down really hard into this week because the timing band, starts today and goes all the way to the 11th. I wish I could make it a little bit more condensed than that, but odds favor today or tomorrow. But we will see if that is going to be the case. Because if it does melt down, we'll go down really hard into 11th, and then we'll see what happens. I had one other question that happened during the break, and that is about a crash scenario. Folks, trying to find a crash is like trying to find a needle in a haystack. They only happen once every 20 or 30 years, or even, once a generation, most likely. So it's not really, worth looking at it. Now, with the last one we had was in 87, which was, 26 years ago. So we're due for something like that to happen again. My assumption is when the market's coming down, that's when the crashes happen. Crashes don't start at the top. They start in the middle of a down move where they trap a lot of people. This might be one of those times. I don't think that it is, but there's a possibility. If they decide to default, which I don't think that would be very smart. The Chinese wouldn't like it, nor would the Japanese. But we'll wait and see, what the ramifications are here down the road. But I don't think you should even think about worrying about a crash. If something comes up that looks real interesting, that has a crash type scenario, then I will try to bring it to your attention. I was looking for something really dramatic in 1987. I wasn't expecting, a 38% drop in the Dow in a matter of a few days. I wasn't expecting 16% in one day, that's for sure. I happened to be short. I did okay, but I wasn't expecting, that type of a move, coming at that spot. And so even though I was right, I wasn't predicting a crash. I was predicting a down move. I was on Bill Griffith's show. It was the old, what's CNBC now, but it was TFNN in Los Angeles at the time, and Bill Griffith and Sue Herrera had the show, and Bill had me on every 3 weeks. And I had, written my book about astrocycles, and I was telling him that sometime in October that the stock market, the Dow would be down more than 300 points. Well, the Dow was trading at around 2,500. And that one day it dropped over 500 points, and all I did was multiply 190 points by 1.618 to get the expansion. We got a caller from Charlie in Chula Vista. Can I help you, Charlie?
Yes, I'm watching Priceline, and it made a top, and and I'm looking for what type of retracement that you think it'll have. What are the points I should be looking for?
Well, I think if you trade Priceline, you should have two things present. Aspirin and rosary beads. And if you don't like rosary beads, try something else. Well, if all you can do with Priceline is to look, this market, it's unbelievable. It just keeps going up and up and up. And it could keep going up and up forever, I guess. But the last correction that we had, which was way back in July, was only about $50 a share. So, we could get an easy $50 a share move down, but frankly, it's a very difficult. It's not a trading stock. It's one of those few stocks that you just ride it to the moon, and when it's over, it's over. But I don't see any. Let me just look at this on a longer term basis. Wow, this doesn't have any sign of a major top that I can see. It's. I would have thought the top would have been around 918, and we're $100 higher than that. Even looking at it on an intraday basis, I don't see anything to make me interested in even trying the short side of Priceline. And I know that's one of the stocks it's more difficult to short because there's not a lot of stock available. So I wish I could help you, Charlie, but if you're in it, just hang on and, use a trailing stop of $50 or $60 and see how high it'll go. Okay.
I just thought maybe some kind of a Fibonacci retracement on this, but no, you don't see anything.
No, there's nothing in this one threw Fibonacci out the window about in 2012 around August. We had a 61% retracement perfectly at $5.55 a share. That was a perfect Gartley pattern at $5.55 a share. I posted that one into Tiger TV. We had a perfect 618 there off of the low in October of 2011, and since that time, it's doubled in price, and as a matter of fact, it's gone 2.618 times the price of the stock. So that in itself would be enough to, scare somebody from buying it. But that doesn't mean they can't go up.
Okay.
Okay.
Thank you for the information. Appreciate it.
You bet. My pleasure.
Bye.
Bye-bye. That's part of the problem that we have with the NASDAQ is you have these stocks like Priceline and Google and Amazon and Netflix, and there's a whole group of them that are doing this. Now, we had similar situation occurred in 2000 when we had the dot-coms. And, most of those dot-coms that used to trade for hundreds of dollars went to either $2 or $3 a share or zero. There's still a few of them on the pink sheets, but, they were octogenarians and became penny stocks. So that's how it happens. You don't know why it's going to happen, but that's how it happens. I know there's a lot of talk, and there's a lot of free press that these companies get, like Tesla and some of the others. But that's not what my gig is. My gig is trading the things that are easier to see and tradable. I don't catch a stock at $5.55 and ride it to 1,000. Double in price. I rather buy of course, I only do futures and Forex anyway, but those moves just don't happen that often. So I don't try to get on board. Occasionally they do, but not very often. Now, the next index that I wanted to talk about here is the utility index, because that's been the wicked stepsister of the Dow Jones. It has not made a confirmation high. We've had higher bottoms ever since November of last year, and we've just had another higher bottom that we're finishing now at a 61% retracement. So there's a possibility here that that we've got some more to go to the upside on the utilities. That's another reason that keeps me from being too bearish in the stock market, is because of the fact that we're looking at this particular move in the Dow Jones Industrial Average, and the Dow Jones Transportation and the Dow Jones Utility is telling us that we're basically still in an uptrend. We're over a major cycle low based on the Bradley. We're at major support on the Fibonacci numbers that we're looking at. So when I add all these things together, it's very difficult to make yourself bearish, in the stock market at this particular time. And believe me, I have a tendency to like the bearish side, because it comes down really fast when it does, and I try to be on those. But right now, I'm just not seeing that. It just looks very, very. The fact is, I haven't seen it this clear. I mean, it just and I really believe in the Bradley model, folks. I've looked at every cycle in that puppy for many years, and it certainly has. It'll hold its own. Most of the time. And when you stop and think that it can be done 100 years in advance or 200 years in advance, why does it work? And it has to do something, I think, with this, with what Dr. Barr from Yale talked about, and that's this electromagnetic energy that these planets have, that maybe it affects, how we react, much like the lunar cycles affect how we act. So I'm not sure exactly, what happens, but that's not important. All I do is try to react to what I see, and that's what I'm looking at. So the bottom line is, we'll have to wait and see if it's going to hold here this week, but we'll take a look at it. I think that the best opportunity, if this is a bottom, is being long between now and November. And remember, folks, we are in the midst of supposedly, not supposedly. This is the month of more bottoms forming than any other month of the 12. October is by far 60% of all major bottoms have occurred in October. So that's telling us that it's another thing statistically that's in our side, that we should be looking at a good bottom here in the stock market this week. That's the bottom line that I see as far as statistics go. We've hit all the Fibonacci numbers, so it looks pretty good. The question has been asked by one of the folks in the Tiger Den, does a Bradley work with the Nikkei Dow? And the answer to that is I have not run it on the Nikkei Dow. I could certainly do it, but I will do that for. In fact, I'll write a note and I will do that for Wednesday's show. I will be able to put the overlay in, and we'll take a look at it. I might even be able to do it at the break if I can have a chance to get the data to line up correctly, but I will do that to see if it works. I've done the Bradley model with gold, and it does have some really good correlations, but frankly, it was done for stocks, and there was more people trading stocks in 1947 because they weren't trading gold and Nikkei and stuff like that in 1947. So it can be run on other things, but frankly, I just basically keep it for the stock market. Someone in the Tiger Den has asked about the Treasury bond market, and I think we're in the midst of a really nice rally here that could take us up to the 134 level. I'm really I'll put the 30-minute bond chart in because we hit the 786 today during this early part of the rally. But the main one that I wanted to show was the daily and also the weekly, because that's the real key to what we're watching here, because we had this little tiny rally that has occurred in bonds. We've been up now for 5 weeks, and I'm assuming that we could get a rally that goes all the way up to 139 in the Treasury bonds. Whether that's going to happen or not, we have to wait and see. The interesting part, and that's the most important thing that I think that we have going for us in the bonds, is that the low that we made in late August was an exact, within just a few pennies of the exact 61% retracement of the low from April of 2010. So we know that has held up pretty good. That was equivalent to around a 4% yield in the long bound. Now we're dropped down to about 3.69 now, But if we could get a rally in the Treasury bonds up around the 139 level, that would be equal to the last rally that we had from February through May of this year. It lasted for just about 7 weeks, and we're 4 weeks into that now, so we should get some acceleration. But remember, this is a very bearish market long-term, folks. It has made a major butterfly pattern that we've focused on last year several times up at that 160 level, and now we are, heading down, and it looks like it wants to go, a great deal lower. The $64 question is how high does it go before it turns down? We're just in our 5th week of a rally, and if this is all we get, just a 5 or 6 point rally off the bottom in bonds, and we take out the 129 level in Treasury bonds, look out below, because interest rates are going to take off and go a lot higher. And that's not going to help the government either, because you're going to be looking at a situation where they've got to pay higher interest rates on the debt that they have. And that's going to be a much larger problem than most people think. I do have some good inside information for you folks, and that is that Mr. Bernanke has bought a home on a hilltop in Connecticut, in the northern mountains of Connecticut, about 2 hours outside of New York City. And the reason why I know is my good friend is his neighbor. He happened to be about 2 miles away, but he is buying a home there, and I guess that's where he'll be, where his family will be residing up in that area. So that's inside information, but don't tell anybody. It's major secret. You can't get into the real estate market and make extra money, because that's against the law, using inside information. That's not fair, as we all know. No one ever does that. They do it in politics all the time, but for some reason, when you do it in the markets for the stock market and stuff, it makes it illegal. Which in our business, an illegal is a sick bird. Someone asked one other question about the Bradley model, and that is it purely mathematical? And the answer is yes. It's all based on positive or negative energy. That was done by this Dr. Barr from Yale University in the late 1930s. He was a physicist, and then all of these are the ones that have been standards of astrology for hundreds and hundreds of years, if not thousands of years, because the first mention of astrology in the markets was by the Sumerians in 7000 BC, where they were looking at Mercury and how to plant wheat, and along with the lunar cycles, and these were on tablets that are in the Vatican. So these things do happen. The question is I don't know the final answers. I don't even want to. All I try to do is just try to put your odds on your favor, so that you got a little bit better than a positive expectation. Better than 55% is all you really need to do, and if you can, quantify your risk and risk less than you're trying to make, you're going to be just fine. Okay, we got to take a break here, and then we'll get down to the last furlong of our Monday day's race.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and I was able to pull up the Nikkei Dow, and I overlaid the Bradley model, stock market model on it. That's the one that's done for ours, but, it's energy. And as you can see, it has a very high correlation. If you notice, the peaks in the Bradley correspond, to peaks in the Nikkei, and especially this last one that we had was within 2 days of the exact high in the Nikkei Dow. So it does have some validity, but believe me, you can't make any inference on one sample size, folks. The question was brought to me to overlay it today, and that's what I did. I haven't looked at this going back, because the Nikkei hasn't been around that long, just after World War II. So it's not a very good sample size to work with. Whereas our market, we have well over 120 samples, yearly samples, to look at. So that makes it statistically valid. There is a correlation with the Nikkei that is really interesting, that relates to the Forex markets, that I think we should take a look at. And that is that the Japanese yen currency versus the U.S. dollar has about a 90% correlation, with the stocks of Japan, and that is truly an amazing correlation. In other words, when the yen goes up, the Nikkei goes up, and when the yen comes down, the Nikkei comes down. So it's related to the dollar in inverse proportion. So it's another way of looking at the market. Now, sometimes this will diverge, but over the past 6 or 7 years, this has been spot on, about 90% correlation of the move that's happening. And we're at, of course, a very critical level now in all of these things because we've had lower tops in the Nikkei on the weekly, but we also had higher bottoms, so we're in this real tight triangle. And the $64 question is, are we going to go up to 16,000 one more time, which was the exact 786 on the Nikkei from the 2007 high to the exact penny. So those of you that like Fibonacci numbers, that should really make you feel pretty comfortable. As a matter of fact, it hit it 2 weeks in a row. It hit the exact same high. And then, of course, it dropped, well over 20%. And, so far, it's still in the midst of this correction that we're in. It hasn't corrected very much, but it has corrected, somewhat. Someone asked me a question about gold. I know that it's not, well, I do this on the commodity show all the time, but I also, do gold, all the time, personally and watching it trade. And we've had some really nice moves in gold today. We've held some really strong support that we needed to hold. And as you can see, I'll put this into Tiger TV so you can take a look at it, that we've held, major support at the 61% retracement. That was down around 1275. And all we need for gold to be bullish is for it to get above the 1334 level per ounce today. And I believe that would take us up somewhere, heading towards 1385. This major bottom that we made in gold back in June at 1170 per ounce is really important, folks, as is the low we made 4 days ago at the 1287 level, 1275 level, because that was a perfect 61% retracement off of that other low in January. And if you believe in Fibonacci numbers, you better pay attention to that, because that's a very, very important number that we're watching. So we need gold to get above 1335 to get it moving to the upside. That would break this downtrend line that we've had going in September. All started in late August through September. That downtrend line would be broken if we can, get at least above 1335 to 1340 per ounce. So that's it. That's the end of the race. We just finished the 8th furlong. Live every day in an attitude of gratitude, and may God bless.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.